I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have now.
Imagine selling billions of dollars worth of one of the most valuable stocks in the world, and it ends up being one of the greatest moves of your career. In Q1 of 2024, Warren Buffett, the Oracle of Omaha, made headlines by doing just that, downsizing his massive holdings in Apple. Over the next 2 quarters, Buffett sold a staggering 510 million Apple shares, raising eyebrows across the financial world. But why did he do it? And how could this bold move possibly go down as one of the best bets of his illustrious career?
When I woke up this morning, I realized that we had a competitive broadcast going out.
Today, we're diving deep into the strategy behind Buffett's epic sell-off, what it means for the future, and why this decision could be his masterstroke. To understand why Buffett's recent sale is so monumental, we first need to revisit 2016. That's when Berkshire Hathaway began accumulating shares in Apple, a move that puzzled many, as Buffett was known for avoiding tech stocks. But Apple wasn't just another tech company, it was the exception. From 2016 to 2023, Apple's stock surged, becoming one of the best-performing assets in Berkshire Hathaway's portfolio. Buffett's investment in Apple turned out to be nothing short of genius, growing by over 500% during that period. Then came the first quarter of 2024. Buffett shocked the market by selling off a significant chunk of his Apple holdings, around 56% or 510 million shares. The move sparked speculation. Had Buffett lost faith in Apple? Or was there something else at play? Here's where things get interesting.
New all-time high today, Josh. Approaching $3 trillion in market cap. It's only $5 away. Only $5 away.
Yeah, it couldn't happen to a more deserving stock, I guess would be the first comment I would make. You probably cannot find a company as dominant as Apple with as much of a grip on its user base, and a company that continues in every generation to improve its products. And yes, there are misses along the way, but mostly hits. And the hits end up producing profits for many, many years as those iterations happen. Every time they release a new model, there seems to be almost instant demand. And, that'll stop at some point, but I've been hearing that it'll stop imminently for 20 years and it hasn't happened yet. So that is why Apple is where it is. But one thing I want to point out, and Warren Buffett makes this point when he does his comments on Apple in every year's shareholder letter, this is a company that is prodigiously purchasing its own stock. And as a result, consider this. The market cap peaked on January 3rd, 2022 at $2.97 trillion. Back then, they had 16.33 million shares outstanding. Today, Apple's market cap is $2.91 trillion with only 15.73 billion shares. That is how you can get a situation where it's a record high price but not a record high market cap, because Apple has been consistently shrinking its float. Shares outstanding are down about 4% since early 2022, and they've been doing that kind of thing year in, year out. So actually, on a price basis, the stock is 3% above that old 2022 high, even though the market cap isn't quite there yet. And if you're an Apple shareholder, what that means is, with every passing year, more of the company's profits accrue to you simply because you held the stock, didn't sell it, and proportionately as that share count shrinks, you become larger on the cap table, if you will.
Buffett isn't just any investor. His moves are studied, analyzed, and often emulated. So why, after such a successful run, did he decide to cash in? And what could this mean for Apple's future? What if this sell-off isn't about doubt, but strategy?
We have only one book at the bookstore, the bookworms year. Normally we have about 25, but we have Poor Charlie's Almanac, 4th edition, and I think we sold about 2,400 of them yesterday, and that will be the only book. Next year we'll go back to having our usual selection. but we thought we would just turn it over to Charlie this year. Our cash and treasury bills were $182 billion at the quarter end, and I think it's a fair assumption that they probably be about $200 billion at the end of this quarter. We'd love to spend it, but we won't spend it unless we think we're doing something that has very little risk and can make us a lot of money.
With Apple's stock at near all-time highs and market conditions becoming increasingly uncertain, Buffett may be locking in gains while preparing for the next big opportunity. It's classic Buffett: buy low, sell high, and always stay ahead of the curve. So where does Berkshire Hathaway go from here? What new sectors or companies could Buffett be targeting next? Stick around as we explore potential candidates that could become the next big bet for the Oracle of Omaha. For investors, Buffett's move is a signal. It's a reminder to evaluate your own positions, consider market conditions, and most importantly, stay adaptable. Because in the world of investing, even the most seemingly untouchable stocks can be sold at the right time. As we close in on what might be Buffett's next great move, remember this: investing isn't about following the crowd. It's about staying ahead of it. And that's precisely what Warren Buffett has always done. So was this massive sell-off the beginning of the end for Apple? Hardly. It's more likely the beginning of Buffett's next chapter. His decision to sell wasn't about abandoning Apple. It was about setting the stage for his next big play. And that's the thing about Warren Buffett. Just when you think you figured him out, he surprises you. What could his next big move be? Only time will tell. But one thing's for sure: whatever it is, it will be calculated, strategic, and quite possibly another stroke of genius. If you found this breakdown of Buffett's latest move insightful, make sure to like, subscribe, and hit the notification bell. We've got more deep dives into the world of investing coming your way.